And now to another window on the retail market. Retail and coal conglomerate Wesfarmers' fourth quarter sales results were solid, according to its managing director Richard Goyder, with the Down Down campaign delivering a 5.2% growth in supermarkets and liquor, but tougher markets on the discretionary side delivering flat sales at Kmart and a slight decline at Target. Mr Goyder also predicts spending will continue to be cautious over the next 6 months. I spoke with him earlier. Richard Goyder, welcome to the programme.
Nice to be with you, Tiki.
Now, your shares were down over 4% at one stage, a low not seen in 12 months. Do you think that was because there were a few disappointed analysts on your supermarket and liquor side?
Well, you know, it's difficult to comment on share market reaction from hour to hour. I expect people went straight to some of the numbers and maybe looked at where they were compared to analysts. But, you know, I think our numbers were really solid in an environment that's challenging and very strong, in fact, at Coles and really good in Bunnings.
Yes, I mean, it would seem that people have to eat.
Well, one of the things that when we looked at Coles back in 2007, one of the things we looked at was how supermarket business would perform through the cycle. And one of the things we found was that, you know, really through all aspects of an economic cycle, supermarkets can, if you perform well within the supermarket, you know, can perform. And we're seeing that in Coles at the moment.
Now, Morgan Stanley brought out some research this week suggesting that the Down Down campaign was almost a bit of a con, with some staples down, but other products up and more than compensating for the Down Down campaign.
Well, that's just not right. If you look at the deflation numbers that we've quoted for the last quarter and for this year, and our numbers are based on what our customers are buying. So it's based on the basket they're buying, not on some theoretical basket. And we've had deflation in the business of 1.6% this year if you exclude the impact of an increased excise on tobacco. And that means that notwithstanding increases in costs of fruit and vegetables and some other things, on a shopping basket basis, our customers are buying for less this year than they were last year. And I think Coles quite proudly has been leading that charge.
So anecdotally, I mean, this programme has heard that people have gone in, customers have gone in, and their same shopping trolley seems to be getting more expensive this year, not less expensive. That doesn't bear up against the facts as far as you're concerned.
Definitely not. You know, we've calculated deflation, inflation on exactly the same way since 2007, and we're really confident that Coles is now a price leader and that our customers are getting terrific value. And we've had some independent research conducted recently, and that would indicate that consumers in Australia are something like $880 million better off than they were when we acquired the business.
There's a lot of talk about deflation. How do you reconcile that with yesterday's CPI figure that came out much stronger than expected?
Well, the CPI basket, Tiki, without getting into too much detail, will include things like bananas, for example. Now, what our number doesn't include bananas because, frankly, customers aren't buying bananas. They've converted to apples or oranges or some other fruit. Whereas the CPI basket has a basic range of products, and within that you'll have some items that are causing that inflationary movement, and so that I think explains a fair bit of it on food. And the other thing that's happening with our customers is, you know, they are trading to buying Coles brand products that are really terrific value, rather than maybe some of the name brands.
We've also got this very strong Aussie dollar. Now, your operations are across a lot of the business sector. How do you think the strong Aussie dollar is affecting business?
Oh, it's one of those really difficult areas at the moment, I think, because you know, our preference as an organisation would be for a lower dollar because we're an exporter, particularly of metallurgical coal, and a lower dollar would help us on that front. But a high dollar has helped a lot of our consumers in the retail businesses because we're able to pass on the benefits of imported product, the lower cost of imported product to our customers. So we're seeing that in Target and Kmart, to a lesser extent in Bunnings, and to some extent in Officeworks. And you know, we are really providing great value for our customers in those businesses. And interestingly, notwithstanding a fair bit of negativity around the retail sector at the moment, we're actually selling more products to more customers in those businesses. So people are still buying a heck of a lot in our stores.
We're also hearing a lot about the cautious consumer at the moment. Is that likely going forward to hit you more than Woolworths, given you've got your discretionary businesses of Bunnings, Target and Kmart?
I think we're at the value end. We're obviously in food staples. We're at the value end of apparel and home products and home improvement. So, I think we're better positioned than most to deal with a discerning consumer. And the challenge for any player in this market, Tiki, is to make sure that you're presenting a really compelling offer to your customers.
And finally, on the coal side, Curragh is back on track after the flooding, but your two other mines, production was down over 10% in both.
Well, some of that just relates to mine sequencing issues and therefore strip ratios. So we're really pleased with the way our 40% owned Bengalla coal mine is performing, and Premier in the southwest of West Australia's production is back mainly because of lower demand from Verve Energy, which is our major customer. And we are starting, as you say, to see better mining conditions up at Curragh, which is really pleasing given the prevailing prices.
You're mulling over a sale, I think, in March of a sale of Premier. Is that still on the cards?
Yeah, we have a process underway and we'll see how that process pans out in the coming months.
All right, Richard Goyder, we'll follow that with interest and, of course, your results in a couple of weeks' time. Thank you so much for joining us.
It's a pleasure, Tiki. Thank you.